On Business Incorporated, IMF says emerging markets need to continue easing monetary policy to recover. Ghana receives 9.7 million euros EU grant to improve access to electricity. And South African ESCOM to increase tariffs by up to 10.95%. Hello and welcome to the program. I'm Chimeze Obi Iwago. First, the markets. And markets in Nigeria and South Africa went sideways at intraday. While Nigeria's main index sustained positive sentiments and was up 0.02%, South Africa's JSE index shaved off 1.08%, tracking global peers amid rising concerns over speculative retail trading movement in the U.S. Locally, persistent worries over South Africa's debt situation alongside COVID-19 numbers and a late vaccination rollout also weighed on investors' mood. The EGX30 in Egypt closed for the week positive on Thursday, and Kenya's ended Thursday's session negative. And markets in the Middle East ended the week mostly negative on Thursday. Dubai's main index declined the most by 1.07%, while the Abu Dhabi index shed 0.35%. Elsewhere in the Gulf region, the Qatari index closed lower by 0.97%. Only the market in Saudi Arabia ended the week positive by 0.26%. And in Europe, markets retreated on Friday morning as market jitters persist over a retail trading frenzy that has rocked Wall Street. Let's now talk to Ashutosh. Hello, Ashutosh. Good afternoon. Okay, the GameStop saga took another turn with brokerages restricting trading. Where does the whole retail trading frenzy go from here?
Good afternoon, Chimi. It's very difficult to say anything on that front. Things are just moving so fast. But yes, today some of those trading restrictions by Robinhood are going to be restricted, which means the day traders would be able to make their trades, and that's the reason why GameStop stock is trading quite high, and it is expected to open with a massive bump for now. But yeah, as far as the whole saga is concerned, it's so difficult to say anything. How are the hedge funds going to react to this going forward? How are they going to review their strategies as far as short selling is concerned? What does it mean for regulators? How are they viewing what's happening with people coming together, retail investors coming together, making their bet on some companies and creating in some cases artificial bubbles, and that's actually dangerous for even the retail investors who stand to lose a lot of money. So what are the regulators going to do? It will be interesting to see how they try and clamp down on such a behavior when people come together to make trades. On the face of it, there is nothing illegal about it, and that's why it's very interesting to see how regulators will like to tackle this issue.
Well, I guess we'll continue to follow that up. Okay, a slew of European countries released their GDP figures for the fourth quarter 2020. Were there any surprises there?
Well, there was at least one major surprise, Spain, that actually the Spanish economy expanded. There were expectations that it would contract, but the economy did really well because of consumer and government spending. That those two spending points rose in the last quarter. Then Germany also did better than expected. So was the case with France. In Germany's case, the exports were really good and the industrial production was strong in the Q4. But then these numbers don't mean much now. They are more largely for academic interest because situation has turned negative since then. There is still a raging pandemic. There are strict lockdowns in place. The region is headed for a double-dip recession. So those are more worrying points, and also the fact that the vaccination drive is really not in the best of shape.
And there seems to be no let-up in the dispute between the European Union and AstraZeneca over vaccine supplies. Bring us up to speed on that saga.
Well, absolutely, yes. And now the European Union is planning to introduce some export controls on vaccine makers. Those companies that are producing vaccines in the bloc, they would now need to seek authorization from the member countries where they are operating, where they are producing those vaccines. And it's up to the member countries to decide whether those exports are okay or not. Basically, the EU says it's nothing, it's not a move to actually clamp down on exports, but a move rather to ensure that there is some transparency and to make sure that produce for the EU is not being diverted elsewhere. And that's why the EU is interested in introducing some sort of a control where the companies are more transparent. But the others see it as vaccine nationalism, and they've actually cautioned against it, including Japan and the UK.
Great week there with you, Ashutosh. But while we enter the weekend, let's continue to watch that GameStop story. That's an interesting one to continue to follow. Enjoy the rest of the weekend.
Thanks, Jimmy.
Well, it looks like retail trading frenzy is overshadowing positive news of the Novavax vaccine, which has been shown to be 90% effective in a UK trial. The UK FTSE 100 and FTSE 250 were down in the morning. Well, let's get the intraday update from Juliana. Hello, Juliana. Good afternoon. Well, I wish to start with Dr. Martens, which is trading on conditional market debut. The full IPO is due next week on the 3rd of February precisely. How is the share of Dr. Martin trading on this conditional stock market debut?
Good afternoon, Chimese. We've been tracking the classic British boot brand's IPO debut over the past couple of weeks. Today, they kicked off, and it really kicked off in style, valued at $5 billion. At early trading, their shares surged more than 19%. This is seen in the UK as a really positive story because, of course, even though everybody at the moment, well, not everybody, but most companies are not faring well because of the pandemic, tech and some retail brands seem to be, fighting that curve. So what's happened with Dr. Martens is that they put out 350 million shares. It's been 8 times oversubscribed, and now they're considering putting out another 50 million. So this is a great news story. Moonpig are going to be the next British brand to try and go for an IPO. They are an online card retailer, and of course they're getting a lot of positive sentiment considering Dr. Martens are doing so well. I think people got a love for a chunky black boot with yellow stitching. I'll have to get you a pair next time the shops are open, Jimmy.
I will appreciate that, and I'm going to hold you to that, Juliana. It's a promise anyway. In other news this morning, fast fashion retailer Boohoo confirmed it has entered into exclusive talks to buy the Dorothy Perkins, Wallis and Burton brands from Sir Philip Green's fashion empire Arcadia Group, which collapsed into administration last year. So how much of the details of this deal do we have now?
Well, at the moment, Boohoo and Deloitte, they're the administrator looking after Arcadia. They haven't released a comment, but last night, Sky News were reporting that the Boohoo High Street raid continues. Just a couple of days ago, they managed to snap up the 242-year-old intellectual property and brand of Debenhams. Now they're trying their share with Arcadia. They've gone for 3 of the stores that fall under the Arcadia brand. That's Burton, Dorothy Perkins and Wallis, which I would say are probably more formal, more for the older crowd. They are in advanced talks with Deloitte, apparently. This is what we're hearing, and the figure that's coming out is about £25 million, which is a cut price deal. Boohoo are obviously doing very, very well at the moment. I believe their market capitalization is about $4.2 billion. They've got this Debenhams deal. They're trying to go for this deal, and if it does go ahead, and according to some sources, they predict that this could be announced as soon as next week. It is going to be a crashing blow for the high street. Already 10,000 jobs have gone with Debenhams. With the Arcadia Group, there are 13,000 jobs. Boohoo are not going to be retaining any of this staff because they're an online company. So it is a sad day, particularly as unemployment figures are so high, and the beleaguered high street are going to be facing massive gaps, because if these stores are not there, what is going to be in the place? I think that's going to be a long-running story here in the UK over the next couple of months.
So tell me, are the London markets responding to these corporate news, or is it more of the U.S. retail trading frenzy? And if you don't mind, let's have an outlook for next week.
I've got to tell you, I tried to go through it with Laddie this morning. I think you were chuckling in the background there. So I won't go into the detail, but it's definitely Reddit and GameStop that are still freaking out investors, not just stateside, but here in London. So the all-share down 0.84%. The FTSE 100 is down by 0.92%. The FTSE 250, the domestic market, is down by 0.52%. British pound also trading lower against the US dollar and the euro, but trading higher against the Japanese yen by 0.17%. Next week, quite a busy week. I think the most important date will be Thursday. The Bank of England Monetary Policy Committee will be gathering. They are going to be making a statement or an announcement on quantitative easing, which is over £800 billion at the moment, as well as interest rates, which are still historically low at 0.1%. Nobody's expecting that to go any lower to negative interest rates. There was a lot of talk before Christmas. I doubt it. And then we've got an update on the housing market on Monday. We've got the nationwide year-on-year house price index, as well as the house price index for December. We're expecting it to be positive because, unlike a lot of sectors, the housing market has really boomed during the second and third lockdown. And then we are going to get the final PMI data for services, manufacturing, construction. Really important because, of course, this gives us a forensic look at how the private sector are doing. And if it is as low as the flash information we got last week, then Britain will be heading for this double dip recession that we've been discussing.
It looks like we have quite a lot to chew next week. But while we wait to do that, let's thank God it's Friday and enjoy the rest of the weekend.
I can't wait. Thank you, Chimmy.
Okay, stocks in Asia Pacific were lower on Friday trade, with South Korea's Kospi leading losses among the region's major markets. And by the Friday market close in South Korea, the Kospi fell 3.03% to 2,976.21. Japan's Nikkei 225 dropped 1.89% to close at 27,663.39, while the Topix index slipped to 1.64% to finish its trading day at 1,808.78. Mainland Chinese stocks were also lower on the day. The Shanghai Composite fell 0.63% to 3,483 points, while the Shenzhen Component slipped 0.612% to 14,821 points. Hong Kong's Hang Seng Index declined 0.94% to close at 28,283 points. The S&P ASX 200 in Australia was down 0.64% to close at 6,607 points. And in the U.S., stock futures moved lower in early morning trade on Friday as Wall Street's volatile week continued. Dow futures fell 353 points. S&P 500 futures and Nasdaq 100 futures also traded in negative territory. On Thursday, the Dow Jones Industrial Average rose 300 points thanks to gains in Disney, Intel, and American Express. Thursday's rally follows the worst sell-off in the Dow and S&P in 3 months on Wednesday. Okay, we'll take a break, and then when we come back, we'll look at other developments on the African continent. To stay with us. Kenya has entered into a recession for the first time in at least 2 decades in the third quarter of 2020 as measures introduced by the East African states to slow the spread of the COVID-19 pandemic continued to hurt output. Let's talk to the CEO at Core Street Research and Analytics in Nairobi, George Bodo. Thank you very much, Mr. Bodo, for joining us on the show. It's always a pleasure.
A pleasure to you.
Now, data released yesterday showed that Kenya slid into a recession for the first time in 2 decades. What sectors were hit the most, and did you see that coming?
Yes, I saw that coming, although you can see the quantum of that recession was much lower than Q2. Q2, real GDP slowed down by 5.7%, and quarter 3 was 1.1%. However, I need to clarify that Kenya did not get into recession, because if you look at the seasonally adjusted GDP growth, it was 4.2%. So positive 4.2%. So that makes it not a second consecutive contraction in GDP. So there was technically we're not in recession.
Okay, so now looking at the outlook now, the National Treasury is projecting real GDP growth of about 6.4%, while the IMF had already projected a growth of 4.7%. The MPC of the Central Bank yesterday in its January meeting also expressed some optimism of a strong rebound. Do you share in that optimism?
I don't share the optimism, although I think that this year the output would be positive, and largely because of low base effect. But I think that the economy will still be under pressure, and you can see that the output slack is widening this year. Of course, some of the sectors that are still likely to keep the economy afloat are agricultural sectors, because there's been good bounty rains, and we expect that the bounty harvest this year. So on that front, there's some good news, because also agriculture accounts for more than a third of output. Some sectors like ICT are still going to be driving growth. However, some core sectors that are still like to be underwater are manufacturing, and even real estate. Those are still like to be underwater this year. But I don't share the optimism, but I do think that there's going to be some positive this year, but not to that extent. I think the Treasury is being overly aggressive, saying 6%.
Now, what's your view on the banking sector in Kenya, and what is your outlook for that sector?
That's a good question, actually. It's not looking good in the banks, because just this week the Monetary Policy Committee met, and if you look at the communique that they released, the Central Bank is saying that about 54% of loans, outstanding loans in the banking sector, have been restructured by the close of quarter 4 2020. That's quite significant. In addition to that, the reported non-performing loans ratio was at about 14%. I think the biggest question I have is what is a restructured loan? I think if the best way to look at it is the way you try to snooze an alarm. You know that the alarm is going to go off, but just keep snoozing it. So it's on that basis. I think that my numbers show me that some of the banks, especially the own category, have as high as 50% NPL ratio, and that's very worrying in my view. And apart from that, if I look at, for instance, the Central Bank's credit survey report that was released a couple of weeks back, in which they're saying that some banks, actually, the respondents of banks, had suggested that the Central Bank increase its liquidity support. Now, that statement is very powerful. It just shows you that banks are actually under duress at the moment. And from my numbers, I think I see numbers like cost of risk exceeding double-digit territory for some of the big banks because of the size of their balance sheet, and that would definitely boil down in capital.
So would you say that the banking sector in Kenya is not strong enough, and should that be attributed to the effect of the COVID-19?
Yes, the pandemic has shredded the balance sheets as I speak. And I think if I move down and move, some of the big tier ones can survive, but the tier 2, the smaller ones, I think some of them will need to recapitalize over the next 2 years. And apart from that, I don't see dividends coming out this year, and even next year. Some of them might start paying dividends next year, but dividends are out. And on top of that, valuations, if you have valuations of the banks, they're still very depressed. I think banks are still trading at below book value, and it's likely to be like that for the title this year. I don't see where I struggle to premiumize bank valuation.
So the National Treasury has released its draft budget policy statement for the fiscal year 2021-2022. What do you make of the fiscal trajectory?
Well, the fiscal trajectory is looking so weak. In the current fiscal year, which is ending June 30th, in the same paper, Treasury is projecting fiscal deficit at 10% of GDP. They're projecting fiscal deficit of 7.5% in next fiscal year, and I don't think it's going to come to that extent. I think next year fiscal deficit is going to be still in the double-digit trajectory. The problem we have here is it's a revenue performance. The current fiscal year, the first 6 months, the Kenya Revenue Authority has only collected 42% of the fiscal year's target, which means that full year revenue collection is likely to come in the region of 80-90%. They're not going to meet the target, and that leaves a widening the fiscal gap this year. The same performance is going to be repeated in the fiscal year. The other problem we have is expenditure overruns. If you look at the paper that the National Treasury released, they're planning to spend about 2.9 trillion Kenyan shillings against a revenue of 1.9 trillion. Why would the government run such a wide fiscal deficit? Why can't they just spend within what they're able to collect? And that's a big problem.
All right, thank you very much for sharing your thoughts there, Mr. Bode. It's always a pleasure. Enjoy the rest of the day. And the International Monetary Fund has asked the policymakers in emerging markets to continue their easing of monetary policy and financial conditions in order to bridge the social and economic gaps caused by the pandemic. The Deputy Director of the Monetary and Capital Markets Department of the IMF explains that easing monetary policy has benefited emerging markets, including Egypt, since the onset of the COVID-19 pandemic and helped in the rebound that these markets witnessed in capital inflows and foreign exchange flows. The fund has also urged banks to encourage borrowing for the good of economic activity and for recovery to be achieved in a healthy way. In its Global Financial Stability Update report, the IMF expects emerging and frontier markets to experience large and persistent fiscal deficit in 2021, albeit to a smaller extent than in 2020 due to the pandemic. And the European Union, through the French Development Agency, has approved a new €9.7 million grant for the Ghana Grid Company to boost infrastructure works on the interconnection line between Ghana and Burkina Faso. This is expected to increase electricity access in northern Ghana and exporting capacity to the sub-region, especially Burkina Faso. The EU grant facility will be used to finance the upgrade of an 18-kilometer long, 160 kV transmission line located in Ghana's second-largest city, Kumasi. It will also support power transfer capacity from the south of the country up to Burkina Faso through the 330 kV line from Kumasi to Bolgatanga, as well as a reduction in transmission losses. And the National Energy Regulator of South Africa has allowed Eskom to collect an additional 6 billion rand of allowable revenue in what could potentially see it implement tariff increases of up to 10.95% from April. The regulator says that the additional revenue will be recouped by Eskom over the 2021-2022 financial year. The decision is based on Eskom's multi-year price determination regulatory clearing account applications for the 3 financial years 2014 to 2015, 2015 to 2016, and 2016 to 2017, and the firm's supplementary revenue application for 2018 to 2019. Meanwhile, Eskom says it will have to assess whether the decision is in line with the High Court judgment and order. And that's it on the program for today and, of course, for the week. Thank you for watching. I'm Chimeze Obi Iwago.